I'd now like to invite Mr. Salman Shah to speak on captives, MGAs, risk transfer and unlocking capital efficiency.
Right. Good afternoon, everyone. I'll be presenting MGA and captives and their role in their placement in the ecosystem of the insurance as an insurance provider. I have a hard stop in like 15 minutes, so I'll just try to quickly wrap it up. And because we have a CEO panel discussion afterwards. Also, to make this presentation a bit less boring, I have referred to Michael Jackson's 12 songs here, so keep focus on that. All right, so why are we discussing this now? So the market is evolving in GCC. So the solvency regime has come up. There's a high requirement of capital. It's a capital intensive segment. And also there is high dependence on reinsurers. And large corporations are evolving in GCC. And the market is quite stable in UAE. It's not growing very fast now. So how captives and MGA can play a role here to evolve this market significantly or faster. So captives are, for example, we have less retention right now. Local retention is low. MGA can help us in providing sophistication in the underwriting and so the companies can retain more. Awesome. So what are captives and what is their role? So captives are licensed insurance and reinsurance entities. These are owned by large corporations. And their primary purpose is just to insure their risk. So not to pass it on to the other insurance company, just to retain the, not to pass on the profit to the insurer companies. And also this is usually used when you are a very large group, so your experience is very predictable. So you don't want any volatility because captives impact your balance sheet. So you don't want any risk which is very volatile. MGAs, so these are intermediaries with delegated authorities to write insurance business for insurers and reinsurers as well. So delegated authority could be, and because they are like broker with a pen. So they can write business, they can even pay claims if the delegated authority allows them. So usually MGAs are used for niche product where you do not have the expertise to write it. So this is an outsourced, specialized underwriting shop using carrier's paper to deliver a smooth execution. So what's the difference between captives and MGAs? The biggest difference, captives are impact your balance sheet. This is a risk in your balance sheet, while MGAs does not carry any risk. They just work on your behalf, on the behalf of the insurer and reinsurer, and they pass it on to the risk to the insurance company. Solvency requirement is also is much lower than insurance companies, which is very high for both. So MGAs, there's no solvency requirement. For captive, the requirement is much lower than insurance company. So this is a comparison between MGA and broker. As I mentioned earlier, so this is MGAs are providing they have a delegated authority compared to brokers who just connect you with the insurance companies. MGS can also settle claims apart from underwriting, depending on the delegated authority. Broker cannot do both. Also, the remuneration is different actually. So so MGAs also get profit commission as well. So these are captives regimes in GCC. So we have many captives registered in DIFC and ADGM and Qatar. So around we have 13 to 14 registered captives in GCC. We also have MGA's regime in GCC, mostly in, they are based in DIFC as well. So this is quite interesting actually. So this is the capital requirement, minimum capital requirement for captives. This is around $150,000 to 1 million, significantly lower than insurance company, because definitely you will not have similar requirement for which matches the insurance company, because the risk is different. And for Bahrain, this is higher, 5 million, which is like 50 million dirhams to 100 million dirhams. So in addition to minimum capital requirement, you also have SCR, which depends on, on a case-to-case basis. So MGA capital requirement is also a lot lower than captive, because they do not carry the risk. It's around, even in KSA, it is around 3 million SAR. And in Dubai, DIFC, it is $30,000, which is very low. So there's a whole ecosystem of captives and MGA in GCC. You have, for example, if you are a big corporation, you want to establish a captive, you can just get the license and get assistance from the captive managers who can help you in establishing the captives. MGA also, Lloyd's Dubai platform can help you getting the business, can act as your MGA. So these are the big captives in GCC, mostly in Dubai. ADNOC has a captive, Madin, Aqua, Babco, Al-Quth, Stellar. So these are the captives in Emaar, also have a captive in GCC. So setting up MGA. So you just need to define the niche, which product are you writing, secure the capacity, get the license, build up the operation model, and see how are you writing the business and defining it. So for setting up captives, for setting up MGAs, you need data, and also you need how are you monitoring the portfolio as well. So this is interesting actually, a return on equity. So in PNC insurer, we can see this is significantly lower than other financial institution, which is bank, and a lot less volatile. So in banks, it is around ranges between 12% to 20% over a longer period duration with a less volatility. Whereas for PNC insurer, it's a lot more volatile and the return is also low. So I also wonder what's the benefit of having an insurance company compared to banks? When the return over a very large period is always as low as like 2.5 times less than banks. Also, there is reporting requirement is high, and probably you're not getting the return on your capital invested. Whereas if we see MGA, we compare it, it is much higher than even banks, although your profit, because this is a capital light model, so you are not getting in absolute terms that much return on your capital, but still it is higher than even banks. So I still wonder, what's the, we need to work as an industry to improve the return on the capital. So MGA is not a bad model actually. If you can establish an MGA, your return would be high, reporting would be less, and you would be paying a lot more to the shareholder. So this, yes, you have to register with the MGA. So depends on if you are establishing an MGA or you are writing the business through MGA. Because not only capital requirement, it's, for example, if you want to grow into a cyber insurance, and which is a very growing line, so and the company does not have the expertise, right? Because this is a very niche market, growing market. So it's better to to have a delegated authority with the MGA, let them write the business, let them manage everything for you, and you can write a lot of business as well. So I think it provides a lot of, I believe MGA is underutilized in this region. And it can be utilized. You can write a lot more business. Even they can write business and see to you from other regions as well. So there's ample room, I believe. Yes. So if you are contacting, let's say, Lloyd platform in DIFC, right? So they can write business on your behalf. You don't need any approval. They are already approved and registered there. So they can write business on your behalf. But if you are establishing it, yes, definitely you will need a separate licensing, right? But as an insurance company, I'm not talking from the shareholders' perspective who are establishing MGA, or big corporations are not even here, which is they can establish captives. But for an insurance company's point of view, they can increase their book through MGA. And they can even reach out to market, which they do not have access to right now, at a no cost. Especially for the lines which are very niche, which the companies do not have the expertise to write or manage, especially cyber, which I believe would be as big as property or engineering in the next 15 years. We can see, how this is fastly evolving. Any comment on this? I rushed through this, I know, because I have a hard stop for CEO panel discussion. So if you have any comment on this or question. Yes.
If that is the case, like every insurance company should have another MGA as part of their subsidiary.
They can.
Maybe make up the rest of the profitability.
But I.
No, I see. So you working at that
Yeah.
holding co, actually you're not treating it like technically you're a group company. Just to make up the rest of like ROE perspective,
Yes.
So I'm not saying like it should be a part of that life insurance. It's just looking at the umbrella like the group level, So
Right.
you have one vertical, which is an MGA.
Yes, makes sense. And the capital requirement is also so low, so it makes sense. And when you can invest this much, and you can have a very high return on equity, which is more than 30%, and this is global actually. MGA experience at a global level, so this is more than 30%. So it makes sense.
I think if I was the shareholder, or maybe more shareholder was sitting here, actually they would put in money more like in MGA rather than in an insurance company where you have plethora of issues, 100 plus, staff to manage and maintain,
Yeah, agreed. And what about PNC returns and banks? So what are the shareholders getting?
I think still that's okay, but
That's okay.
comparing with like from insurance company perspective, it's like
Yes.
a bleeding, so.
Yeah, it makes sense actually.
Yeah. I think we have one shareholder, maybe actually he can talk about a board member.
I think it's just a matter of long-term strategy for insurance companies to follow, right? And MGAs are vertical for specialized underwriting. So if insurance company can build underwriting expertise within its own team, it will not need an MGA.
Yes.
That's my take on it.
It won't, but it comes at no cost. It's a commission, right? So you don't need to build up expertise for cyber risk, let's say, because that's a very niche, it's a evolving expertise. It's not static, just like property engineering. You will not find very good underwriter for cyber risk. So depend on those who are already have this expertise and leverage from there, right? Yes, correct. Very small, agreed. 100%, 100%. It's a very capital light. Yeah, yeah, yeah. No, it won't happen. Yes, agreed. So this is capital light. That's why your percentage is higher. But it's just always possible. It will have a very less volatility as well. So as a group, you can have an MGA, right? So that's for the shareholders actually to decide.
Your point actually is there are companies that if you take out first maybe top 5 or maybe top 7, actually the rest of the companies they are I think producing around like maybe 500 million dirhams, right, for as a premium, like annual premium, right? So it makes sense to have like MGA.
If I may, I think there's a bit of mixing up on the topic. So the MGA would be focused on the reinsurance business. You would still need the insurance company to write the direct policies. That's to start with, okay? So you cannot have one or the other. The MGA is replacing or complementing the conventional reinsurers that are out there. So if you would like as an insurance company to venture into reinsurance business, you can start by an MGA, then you would end up internalizing this into your overall operation because you already have the capital to absorb this and you would not be ceding away the profits on the underwriting if you are doing the underwriting in the right way. And to the point of the colleague that mentioned the percentages, you would see that the biggest MGAs, for example, in our region here, are writing less than 1/10 of the decent sized insurance companies. So it's not a replacement model. It cannot be one or the other. To the point of the insurance companies versus the banks, my humble view is that you're absolutely right. And I've said this here in last year, that insurance companies are being called as thieves, where when you look at the returns that banks make, I think it's an unfair statement. I think it's the other way around. Nonetheless, from a capital perspective, entering into the banking industry is not as easy. So the entry barrier is much higher in the banking industry than in the insurance industry. So the shareholder have the money, they cannot enter into the banking industry. They go to the second best thing or third best thing, so on and so forth. That's yes. my view. Thank you.
Yes, but as an industry, we need to think how to increase this return on. Yes, right? Yes, all right. Thank you.